Will global pressures persist or will policy continuity positives take over Indian markets? I think that's the key question for today ahead of the FOMC decision tomorrow. Thanks for tuning into the trade setup with me, Niraj Shah. Let's take stock of the global news flow first. The US stock futures have slipped as investors gear up for the start off of the Fed meet. Remember, the decision comes out tomorrow, Wednesday evening. That is our time. Asian markets are mixed ahead of the Fed and the BOJ decisions this week as well. Across the board, I think you see mixed, and we'll come to those numbers, but it's a mixed bag out there. Oil prices have risen over 2% as Goldman sees supply deficit on fuel demand. Remember, it's a busy time for oil simply because we have the OPEC report coming out later today and energy outlook from US coming out tomorrow, as well as the IEA, International Agency, will also give out its outlook tomorrow. So therefore, it's a busy next 2 days for oil as well. Apple has debuted AI tools, including ChatGPT tie-up. Now, why this is interesting is because when Apple does something, the world takes notice, and Elon Musk has taken notice of this because what Elon is saying that he will ban Apple devices if OpenAI is integrated into the operating software. In fact, one of the stories seems to suggest that people who carry an Apple phone will have to leave the devices at the door before they enter I think any of the Musk empire premises as well. So it's an interesting one that's shaping up out there. But be that as it may, let's take stock of what the key cues are for this week before we get to what the markets are doing. So remember, FOMC rate decision on Wednesday, CPI data from India, US, China, amongst other countries, the annual investor days. This is again coming from yesterday, but why I'm bringing this out is because the Tata Motors investor day is today. And of course, the monthly OPEC report comes out tomorrow. So therefore, oil becomes firmly in focus in the session today. US markets kind of were okay, but US stock futures are lower, as a result of which Asia, bit of a mixed bag. Hang Seng is down, Shanghai is down. They would move in tandem. Nikkei is up. I think Kospi was also all over the place. And Straits Times and ASX did what they did. And as a result of which, the implied open for our markets, a marginal green, 23275 is what the GIFT Nifty is suggesting. Now remember, this is after what the markets did yesterday, which is went up and then came off quite a bit to end in the red, our markets that is. So therefore, the question today is, like I said at the start of the trade setup, and let's get the last start of this piece, but let's get the trade setup graphics here. To my mind, the global cues will triumph over policy continuity positives. The fact that the top 4 cabinet birds of the key ministries are seeing policy continuity. FM Sitaraman, Minister Ashwini Vaishnav, Rajnath Singh, Amit Shah, and from a market's perspective, that's a big relief, if you will. Yes, aviation goes to TDP, but TDP is a progressive party per se. I doubt that the aviation policies will get tweaked for the worse as a result of this happening. So I think there's a big positive, and that might give that bit of a support to our markets, because I thought yesterday the markets came off also because the decisions were not out and everybody was wondering that is there a hard bargain being driven. Seeing this policy continuity is a big positive, but because global cues will be a bit quiet, and I was saying this since yesterday, that ahead of the FOMC verdict and the commentary coming out, it's very difficult for markets globally to take a one-way move or a trending move. So therefore, doubt that will happen today also, despite the policy continuity positives. The option data is indecisive as well, very largely like large resistance is likely at 23,500 levels on the upside, at least as per the call data. The put data is wedged at about 23,000, so supports kind of there based on the options data really. And crude, as I said, remains in focus ahead of the OPEC decision as well. And I do think that because crude prices have gone up, oil sensitives may react negatively today, and therefore that space remains firmly in focus. Watch out for Interglobe, watch out for oil marketing companies. Separately, watch out for the oil upstream companies, the likes of ONGC, Oil India as well. Could be interesting movers and shakers in the session today. Also, viewers, just remember, before I get to specific stocks, what remains in focus is what government does. So yesterday, fertilizer stocks went up. Why? Because the PM released the latest installment of the Kisan Samman Nidhi, right? And as a result of which these stocks were up and active. The other question, cement stocks went up because the belief is that GST will be lowered on cement. So what the government does in the run-up to the budget with various sectors also remains firmly in focus. Stocks to watch today, 3 large block deals. Watch out for each of these. First one is Interglobe Aviation. The Bhatia family unit, Interglobe Enterprises, will sell about 2% stake in the company via block deals. The block deal is worth about 3,293 crores at a discount of about 7% to the current market price at 4,266. Remember, one, there's a large discount. Two, it's happening from the Bhatia family and not the Gangwal family. The Gangwal family stake will come in after that 5-month, cooling window is over. So the market will want to believe that there is large supply continuously coming in Interglobe. On a day when crude prices have rallied, I would suspect that a stock which has rallied quite strongly could see a pullback. So watch out for Interglobe Aviation. Watch out for IRB Infra and Honasa as well. Sintra looks to sell about 5% stake for about $228 million. This is, and the point being, this deal is coming after an 8% fall yesterday, and after the management or the CFO was on various other media platforms saying that do not expect too many block deals coming in. Pat, the next day there's a block deal that has come. I would suspect that IRB could see further pressure despite the fact that it was down 8% yesterday. The floor price is at a 10% discount to the closing price, so will correct today too, I believe. The other one is Honasa, which is also likely to see a block deal, so watch out for that one. Then Raymond, positive news. It's been selected as a preferred developer for a redevelopment of a residential project in Bandra East. Lest you think that I'm repeating yesterday's news, no. It won a deal of 2,000 crores day before yesterday. They've put out a release yesterday of another project win of over 2,000 crores. So very likely that Raymond could see a further positive reaction in the session today as well. Transformers and Rectifiers has opened a QIP. The floor price is set at 699, which is a discount of about 4% or 4.5% to yesterday's closing price. But if the QIP is successfully completed, then the stock could actually see a bit of an uptick in the session, so do watch out for that one. Life insurance stocks and the private life insurers could react positively today because all of them have had a really good growth. SBI Life, HDFC Life, ICICI Pru, a very large growth, but that's on the back of a lower base. And even Max had a decent growth. So I would suspect that most of the private insurers could actually do well in the session today. Some of them had reacted positively. LIC didn't have the best of numbers, so that one is not, hasn't had a good one. It's not a private life insurer, but the public, that's a public one, but the private ones, HDFC Life, which was up yesterday, could well see further traction. Jubilant FoodWorks, I don't quite know whether the stock will react positively or no, but Domino's has crossed 2,000 store mark in India, and this is a landmark for a retail chain to have 2,000 stores really. And the last 500 restaurants for them have come in a record time of 29 months. Maybe Jubilant FoodWorks reacts positively. 2 brokerage notes before we wrap up very quickly. First is Nomura and KC International. They've upped the target price to 960 from 598. That's a sharp uptick in target price, but it's about an 18% upside to the closing price of 809, and various reasons. They say that there's a robust T&D outlook, gradual margin recovery as well. The management has retained FY25 order inflow revenue growth guidance of 40%. And of course, they say that they are aiming for an EBITDA margin of 7.5% for FY25 versus 6.1% for FY24. So not only revenue growth, but a margin growth, which would mean that the PAT growth could be significant, which is why Nomura has upped the target price so strongly. So watch out for this one, and watch out for Elara Capital on HCC. They've initiated with a buy. The target price is 63, which is a 65% upside. And they've cited that it's like a phoenix. It's coming out of the ashes, if you will. They're poised to reclaim. They said that the stock is poised to reclaim lost glory. The 10-year slog has improved the financial health of the company. The debt restructuring, dispute settlement, all of that done, and the company is ready to flex its muscles, in the words of Elara Capital. And the experience of executing in-house complex and marquee projects will probably hold the company in good stead. So watch out for HCC. That's the other stock that could react, because Elara believes that the stars are aligned for growth and the debt burden starting to lessen as well. So do watch out for this one in the session today too. Could be an interesting one in focus. All in all, lots of block deals, lots of brokerage notes, lots of movements because of oil prices possible, and policy continuity and government moves could all keep stock-specific action continuing. I hope all of this helps you in planning for your trade. Do leave in the comment section something that you might want to hear. Our team will take note of that, and we'll try and improve what we're trying to do here. Thanks so much for tuning into the Trade Setup.